BT shares on the way down this morning, and by a wide margin too, because the company warned about the outlook for the economy and so people's willingness to spend more on such things like content. Let's take a look at the numbers that we saw come through before we take a look at the share price chart. We saw adjusted EBITDA up 2% to 1.9 billion. That didn't fall far short of what was expected, but profit before tax was down 10% to 500 million. The company says there's no change to its full-year outlook, but the business has been putting up prices to gain extra income, and this is exactly what BT has done. It really does help the coffers, and as a result of that, it brought in these figures today. But in putting up annual contractual prices, it helped offset cost inflation for the company, including wage rises for its more than 100,000 staff. Now, there are threats of strike action by its frontline staff, possibly coming through in the summer. But the big part of all that's happening at BT is the network investment. Let's take a look at the BT share price chart, because I think it's worth looking at this in the context of its investment it wants to make. And if, as I say, people begin to start tightening their belts in terms of some of the content they're buying, this could cause a little bit of a problem. The investment is key, and BT Openreach is now connected to 8 million homes and businesses across the UK. And it wants to add a further 3.5 million this year. That's going to come at a cost. And so BT is going to have to get money in through the front door in order to be able to pay for all this network rollout. Meanwhile, EE's 5G network covers more than 55% of the country's main population, according to BT, and this is one of the big drivers of revenue. But you can see here, substantially down in today's session, and we're trading at levels not seen since the 8th of March this year.